I am being joined by Amit Pabari, founder and MD at CR Forex, joining us at the moment. Thank you so much, sir, for giving us your time. Let me, begin this discussion by understanding something really basic. How exactly does a dollar INR buy-sell swap help inject rupee liquidity into the economy, and why is this taken in the first place?
So basically, as in the circular it is mentioned that whenever RBI is doing buy-sell swap, it is a phenomena by which they are going to inject rupee liquidity into the system. To explain it in detail, let me give you an example. If a bank gives dollar to RBI, say $1 million, RBI in retail will give amount of rupee to the bank. So say approximately 9 crore rupees for 1 million. If RBI is doing 5 billion buy sell swap, it means that they are adding approximately 45,000 crore of rupee liquidity into the system. So now with rupee liquidity increasing in the system, it helps importers and exporters in following ways. First, once you enter a rupee liquidity into the system, the forward premium, the hedging cost in the market reduces. At a time when the currency is getting weaker and weaker day by day, if the forward premium or hedging cost reduces, it is a step which is going to help importers. Second, whenever rupee liquidity is there in the system, it gives RBI a room to intervene directly in the FX market by selling on the spot. Whenever rupee liquidity is low, they will not intervene directly. They will use other mechanism. But when the liquidity is ample, it gives them a scope to intervene directly into the market by selling dollars. To give you a context, last year also RBI did the similar thing, and they have infused liquidity close to $25 billion. In the month of March 2025, they have announced buy-sell swap of close to $10 billion. At that point of time, rupee was trading near 87.5, and because of that phenomena, rupee for a short period of time appreciated or got stronger towards 85 kind of a level. So in a nutshell, there can be two objectives. First, it is going to inject rupee liquidity. Second, hedging cost can reduce for importers. Third, but last step, rupee might get stronger because of this.
Thank you so much. That was very neatly put, I must say. Mr. Pabari, as a common consumer, looking at this news, there are a couple of factors that I'm going to think about when I read such a development. Number one, the rupee especially has been the weakest currency. It has dropped about 7% so far this year. The weakest and the worst emerging market currency, and especially Pan-Asia. Look at the amount of countries, a handful amount of countries that we do deals with in terms of rupee. There is, say, Bhutan, there's a bit of Sri Lanka, a bit of Maldives because of our ties with these neighboring countries. But even so, the dollar remains the largest and the most dominant currency pan-world, globally. I'm talking about a scenario where the rupee has been constantly depreciating, has been hitting record lows day after day. I have been reporting about this personally. I want you to tell me, do you think such moves, of course, are appreciated as the RBI is trying its level best, but to what extent is it effective in helping save the rupee hit its bottom?
These are all smaller measures which can make rupee stronger for a couple of trading days or a couple of trading weeks. We have to take major steps to attract inflows coming into the economy. Let me give you a context. In 2013, RBI announced FCNRB for NRI investors. At that point of time, we were able to generate 25 to 30 billion of flows. Now, when we are raising that kind of a flow, it always have a cost. So let us assume what is the cost. Approximately, if I'm raising $30 billion in terms of FCNRB deposit, the cost will be coming to 2 to 3%. So basically, it means that the cost will be 0.6 billion to 0.9 billion. So approximately the cost will be 8,000 to 9,000 crore. Now, what benefit we will get if we are raising this kind of a flow? As a country, our net import on oil is close to $140 billion. If we are able to save 1 rupee, then we are saving 14,000 crore as a country on our oil imports. To give you a context, in 2013, at that point of time, rupee was trading at $68 per rupee. Then it came down to 61. So if we are able to appreciate by 2-3 rupees also, then the amount of saving will be much higher than the cost. So basically, RBI and the government have
Interrupt
to
you.
think.
I have very less time left. All I want to know is that, yes, I understand the significance. Nobody is taking away the importance of this move. I want to know, given how much global uncertainty has increased in the past couple of days and months, and the depreciation in the rupee, I would like you to tell us whether or not this is the first step that you consider that the RBI should be taking and has taken, or will we need more such measures? 30 seconds.
I think we need more measures. This will be only helping us to appreciate by 50, 70 paisa.
Okay.
Major steps has to be taken.
Understood. Thank you so much, Mr. Pabari. It was really helpful to get you on the show and understand why the RBI has taken such a decision. And we hope that the war ends soon so that we can protect the rupee going further. Thank you so much for joining.
Pleasure is mine. Thank you.